Hello, this is the TradeScout US Stocks and Futures and Forex Market Preview for the rest of the week, Thursday the 28th. I'm sorry, this is Thursday the 28th. Friday the 29th of February 2022. A lot of things to say here. We're wrapping up core earnings season. A lot more earnings came out today. We wrapped up a Fed meeting. We're wrapping up July, which is typically the most boring, slowest, choppiest month of the year for summer. Friday, tomorrow, is the last trading day of the month, which means we're statement printing as well. So very low expectations as we head into Friday, tomorrow. But here's a look at the ES. That's a 5-minute. Hold on. Here's a look at the ES front month futures chart. This is the daily chart of the broad market in futures form. You know, coming off the lows. Fed raised 0.75 of a point this week, and it seems to be a positive. A lot of money coming back over here because it looks like Europe and some of the other countries are going to be suffering a deeper problem than we are. So we're the strong suit right now, and that's why the money's coming back. The dollar's rising. You can see that. So the dollar getting stronger, the stock market coming back up. Those are positive signs. The employment situation is very good. But, you know, a lot of other stuff out there is not great. So supply chain issues continue. The inflation stuff's there. I mean, I would imagine that the inflation stuff's going to diminish now that the Fed has done what it's done, but we will see. But right now the market seems positive about this. If you look at this chart, and I thought this thing was going to fall apart a little bit worse. And yes, there's an issue with the yield curve potentially inverting. But if you look at this chart, you know, we're not down enough yet to say that this is a big correction recession. I mean, I was looking at numbers much lower, like under 3,000 on the S&P to get there, and we never got there. We got the 13 buy signal back in May with a risk line, that pink line. We held that exactly off that signal, and the market's curling up. So these are positives, and you know, the market doesn't typically get anything wrong. So you know, if we head back up for the next month and run up, you know, you're going to eliminate whatever construction was here for a breakdown and a crash is going to be eliminated if we just get back to that 4,500 level. I mean, at that point, you're not even down 10% off the highs. So you can't really talk about recessions and all those things if that's where you get to. And right now, we're heading that way. So we'll see. We'll see. A very surprising reaction to the Fed, especially today, not yesterday as much, but we'll see what we get. Here's a look at, what else are we going to look at here? We're going to go through the major daily charts. The S&P up 48.82 today. And again, it was up yesterday after the Fed announcement. NASDAQ 100 up 116. It was kind of a late day move for most of this stuff. The SOX up 33.5. New highs for the last couple of weeks. The biotech's down though, 22.87, but this is well off the lows at least. Russell 2000 up 24. They all look very similar, don't they? Crude oil sitting at 97.30. This is helping. This is at the lows of the last 5 months. So again, when you realize that oil spiked on the war, but now it's at the lows of that whole thing, that is a big deal for us to be here. So again, I have to think if the problems you're hearing about in the economy are as bad as they are, the market doesn't buy it, and the market's not usually wrong. So we'll see how this goes, but so far we're not seeing signs of the next crash or any of that type of stuff. So we've got the, like I said, oil here. That's actually at the lows since the war started. That's a positive. You know, you had people like JP Morgan and stuff saying oil is going to 180 a barrel. So they're wrong. You got Kramer out there saying things about inflation, most of which is wrong. And I think the Fed's doing the right thing. They're slowing things down. They have to, you know, off of the rebound year. But obviously, without the war, we probably wouldn't have had some of these late supply chain issues and inflationary numbers, but we do. So if it's temporary, and it probably is, you know, that's a positive, and the market is starting to reflect that. We'll see if it holds. The yield curve, if it inverts, that's a problem. We'll get there. Gold up $34.30. That's a big one, but it's still off the lows. Remember, this is the one that's supposed to be the inflationary gauge, right? I mean, if inflation's going up, gold should be going up. Gold actually collapsed after the war started. So very, very interesting. This suggests to me that it's not inflation by itself. It's supply chain inflation caused by the war, which can be correctable. Right? There's a difference there. But gold's telling you that story. Advanced decline ratio on the NASDAQ, plus 892, more stocks up than down. On the New York, plus 1624, more stocks up than down. NASDAQ volume, 4.8 billion shares. The VIX closes down 91 cents. New lows on the VIX for a while. Again, this is not what I was looking for. I was really looking for a bigger crash in the market. This is surprisingly strong. We never got a VIX reading over 40. We never got a real panic. I'm not saying it couldn't still happen, but the market is starting to show signs of not being interested in that. And so it's funny because now that we're where we are, suddenly you're starting to see news headlines from people saying, oh, we're about to crash. We're about to crash. Really? Well, where were you when we were up high and you didn't call the 20% correction or the 18% correction or whatever it is? But now you're saying we're in a crash, but the market's heading up. So, I mean, these pundits, it's hard to take them seriously. That's why we just trade the markets. Trend closes at 1.09, puts the 10-day moving average around 1, doesn't matter. Apple up 56 cents. At a minimum, it's new highs there. Amazon up $1.31. That static trend line, that green line, will be interesting when we get there. Meta down $8.86. Near lows for the year. Google up $1.16. Goldman Sachs up $4.57. Netflix down 73 cents. Still just a blip, but it is off the lows a bit. Peloton, we're going to stop maybe following Peloton. $9.33. TLT, the 20-year bond ETF, up 93 cents to $1.17. 117.75. Tesla up 18.24. That's new highs on Tesla as well. Zoom up 31 cents. We've got Bitcoin sitting at 24,000. So that's off the lows. The Dow up 332. It is what it is. In terms of the intra-day action, let's take a look at the 5-minute charts over the last 2 days with the Fed. Again, we had gapped up Wednesday morning ahead of the Fed. Pretty flat day, and then suddenly the Fed announcement comes out, then the meeting, and then we spike up, pulled back late. Today we gap up, pulled back, almost back to where we started before the Fed announcement, but then drifted higher. Afternoon was boring. We're still in summer doldrums. Hard to imagine an earnings season. Hard to imagine that Friday is going to be interesting, but it is what it is. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading Friday and a good weekend, and let's get to August.